This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
It is great to have your company here on Business Now on this Monday. Well, let's take you around the property markets from over the weekend. And across the country, there were 1,564 auctions. But look, the clearance rate has slipped below 60%, as you can see here, to 58%. And that says something about potentially the worry of higher interest rates. Now, in Sydney, 570 auctions. The clearance rate here, 61.6%, which, to be honest, is still fairly respectable. The same thing in Melbourne, 569 auctions and a clearance rate there above 60%, 61.2%. In Brisbane, 102 auctions. That's more than usual, but less than half of those were sold, just 47.1%. Adelaide remains the strongest housing market in the country, 53 auctions, 79.2% of them were sold. In the ACT, 39 auctions, 64% of them sold, plus 75 private sales. And in WA, as usual, very few auctions, but there were 531 private sales. Well, let's bring in here RBA Group's senior economist, Paul Ryan. Paul, many thanks for your time as always. Let's go to interest rates. Let's talk about that in the inflation number that comes out on Wednesday. The market's saying that's going to be higher, not lower than expected. Australia seems to be going in the opposite direction to other developed countries right now. Are we going to get higher interest rates or not, do you sense?
I still think no. I think expectations are that the CPI read will come in at about 1% on the trim mean measure. That'll leave annual inflation around 4%, so above the RBA's target. But I think the crucial thing here is if the RBA is going to increase interest rates, they want to see evidence that they need to increase interest rates 2 or 3 more times. They're not going to do one and done just to tweak slightly. And so far, I don't think there's been enough evidence that the RBA needs to hike rates that much.
Isn't the evidence that inflation's going up and not coming down as they expected? I mean, I heard that when I spoke to the Treasurer, he said it does zigzag around the place a little bit, and fair due to him about that. But the fact of the matter is, it is going the wrong direction.
Yeah, I mean, the new Deputy Governor said, hey, we're not going to make this decision on one data read alone. The big number will be CPI on Wednesday, and that could change everything, really. If that comes in above, I think people will rightly expect that rates will have to go up. But if things come in at expectation, I do think that the RBA will keep rates at hold.
So this is almost a game of chicken at the moment, isn't it? So who blinks first? Because what they do not want is inflation to be embedded in our economy. If that happens, then that means much higher interest rates have to happen. The 2, 3, 4 interest rate rises that you might need. That'd kill off property markets. That'd kill off our economy stone dead. That would see your unemployment rate rise very sharply. That would be seen to be a failure of the government and of the Reserve Bank.
Yeah, that's the Reserve Bank's biggest fear here, is that higher inflation becomes embedded in expectations. So they want to move quickly and fast, and that's how they did a lot of the work in 2022 and 2023. But they still need to bring down inflation in a reasonable timeline. That's their concern at the moment. If it's going to take too long, then they'll need to act. And that would be, devastating for the broader economy. The Reserve Bank is trying to have this smooth landing where we don't see unemployment rates rise too high and see a broader recession across the economy, which was people's main fear across 2023. And obviously that would have big impacts on the housing market.
But it's almost a bit distorted, the housing markets, because there is such a shortage of housing for the population that's come in. In many ways, that's almost contributing to it through the rents that we're seeing, the rent rises we're seeing. So there is this strange situation right now where there's the prospect of higher interest rates, but there's no real slackening off in the housing market because of the shortage of supply.
Yeah, and affordability concerns are paramount across the housing market. We're seeing more affordable capital cities continue to outperform, so Perth, Adelaide and Brisbane. And even within places like Sydney and Melbourne, we're seeing more affordable parts of those cities outperform. So it's a broad-based thing where, yes, there's a shortage of homes. We see that most strongly through the rental market. Rents are up over 9% over the past 12 months. That's pushing whoever can get into the purchase market to do so, and that's putting increasing pressure on prices.
But the reality is that the interest rate rises that we've seen so far have not done what they were expected to do, which was to see the property gains start to ease off.
That's one byproduct. The RBA doesn't target home prices. Really what that is we tend to see prices fall when interest rates are higher because borrowing capacities get constrained so much. But we're seeing borrowing capacity constrained at a time when supply just hasn't responded to lower interest rates earlier in the pandemic.
But your own sense right now is no move from the Reserve Bank, that they will actually play this game of chicken, that they'll actually sit there and just wait.
But it's going to be longer, right? Expectations now, if we are going to see rate cuts, it'll be the second half of next year. So what's really changing is maybe not interest rates in the short term, but it is interest rates in the long term.
I'll tell you what, Paul Ryan, always great to have you in the program. Many thanks for your time today.
Thank you very much.